Hello and welcome. This is Nolan Formulary with DiscoverNC Homes and Nolan's News, and I'm very excited to have Mitch Ludwig with Coastline Mortgage here with me today.
Thank you, Nolan.
Thank you for coming, Mitch. Appreciate it. Mitch has been a friend of mine for about 15 years, and we've been working together 15 years. So I think the world of him. He literally comes in with the best rates time after time again. So wanted him to come today, though, to talk about what I found is just kind of very interesting. Not too long ago, the Feds, about a month ago, I think, right, Mitch?
July.
They increased the rate by 3/4 of a point, in turn, which usually increases the rate on the secondary market. Well, that did not happen. It actually dropped probably more than 1/2 point. We were at about 5.5%.
A little over, yeah.
Yeah, for a 30-year fix, and we've dropped just under 5%. So can you kind of explain that, Mitch, what's going on?
Sure. You have the Fed rate, and then you have the secondary market. And ultimately, the Fed rate is a sliding scale. It's up and down. That's what the banks are borrowing money at.
Okay.
But then you have the day-to-day fluctuations on the secondary market are based off of basically the supply and demand and the fear of losing money.
Okay.
So when I say the fear of losing money, I'm talking about hedge fund investors, your Edward Joneses, Fidelity Investments.
Big guys.
They've got a couple billion that they're trying to handle every day, and they've got to park it somewhere. So a safe place to park it is in mortgage-backed securities, and ultimately what that is just a group of loans that are packaged together and sold as an investment on the secondary market.
Okay.
And they have a yield that's on that.
Okay.
So you buy $100 million of this security, we're going to give you 1/4 percentage point or 1/2 percentage point, whatever it might be.
Okay.
Okay, and that's based off of the interest rate.
Okay.
So if these investors are worried or fearful of the secondary market or the stock market, what they're going to do is they're going to park their money into mortgage-backed securities because it's very safe.
Safe place.
You've got insurance on the house. It's backed by real estate. It's very safe.
Yep.
Low yield, but very safe. It's better than losing any money.
Yeah.
So what is essentially happening is that you have this market that's out there right now, and they have this. This is the rate that we're at, but people are worried about the war in Ukraine, all this different stuff that's going on, and so they're not investing in the stock market, and so these investors are parking money in mortgage-backed securities.
Okay, well plus two with the stock market having
crumbling.
all-time lows.
So they're basically, they don't want to invest that money. They'd rather not lose money. They'd rather make a little and not lose any money. So they're investing in mortgage-backed securities. Well, if you're a securities broker and everybody wants to invest in it, you don't have to make the yield very high on it. Well, that yield is directly related to the rate. So while the Fed is up here, the secondary investors, because they have so many people investing in it, don't have to increase that rate.
Okay.
Okay, so that's what's keeping rates low right now.
Okay. And you know, we talked before this, because of this, the Feds are most likely going to jack their rates again.
October, 3/4 of a point.
So October. So I think what that means to buyers is now is the time to get in before that rate increase, because at some point,
well, they're going to keep going up. I mean, that sliding scale is right here. The day-to-day fluctuations were happening whenever they were basically borrowing it at 0. Okay. And they're going to happen whenever it's up here at this. So as they keep going up, the day-to-day fluctuations will occur, but your rates are going up for sure.
So I think it's a good time window, you know, the month of September, hopefully part of October, to lock into a rate if you're looking around, because inevitably these rates are going to go back up again.
Definitely.
Again, Mitch is a wealth of knowledge. Coastline Mortgage, I'll have his website, his contact on the newsletter. So please, if you guys have any questions, let him know, let me know. And Mitch, as always, thank you for coming by and discussing.
Thanks a lot.
Appreciate it.